Brian, you manage an unconventional strategy over at the Hennessy Focus Fund. It's a very focused fund, unlike a lot of other funds out there, which may be closet indexes. Tell me how you do it.
Yeah, Greg, we manage a Hennessy Focus Fund. As the name suggests, it is concentrated, about 20 to 25 positions in total, about 70% of the assets in the top 10 positions. We're also very long-term oriented, 5 or 10-year investment outlook, probably about 10 to 15% average annual turnover.
And why do you manage a concentrated fund? Because we keep hearing about diversification. Maybe over-diversification is a bad thing. Tell me why you want to be concentrated.
Well, if you're not going to index, we believe you really need to be active in your investment selection. And by being concentrated, we be very selective in the types of businesses we look at, be very patient, looking for the right entry points. And it gives us the latitude to conduct significant fundamental research on those businesses that we're interested in. We think that that makes all the difference in trying to determine winners and losers in active management.
And how do you pick stocks? What's your basis? And then also, how do you know when to sell them?
Yeah. So given our long-term orientation, we're really looking for those types of businesses you'd want to own over the long term. So businesses that are doing something unique, have a competitive advantage. Businesses that have a good growth opportunity in front of them. Businesses that are very well run. And if we could find those business attributes, then we just want to pay a reasonable price for them.
All right. So can you give me an example? Talk your book. Give me a stock you like.
Yeah. So I'll tell you one we're really excited about now, a company called AST Space Mobile. They are establishing a novel technology that allows connectivity to your everyday smartphone from low Earth orbit satellite. And so this has not been done successfully in the past. We believe AST is going to be able to do so. It's going to solve a big pain point for the globe, really. 5.5 billion subscribers to wireless service. All of them experience outages and drops in coverage. This will help solve that problem.
How about another one?
Brookfield Asset Management, business that we have owned for quite a long time now. It's an alternative asset manager, very large in the industry, similar to Blackstone, KKR, Apollo, that the audience may be more familiar with. Brookfield and all the large alternative managers have a big secular tailwind behind them, with investors looking for alternatives to stocks and bonds. These alternative managers provide a great solution to solve that problem. We like Brookfield amongst the group because we love the management team. We also think they've got great exposure to the right mega trends. So they like to talk about deglobalization, decarbonization, and digitalization. They're well positioned to solve the investment needs over the next decade or two for the economy there. And that's one of the reasons we really like it.
And then finally, we've seen the S&P hit new highs after a very volatile first half. What's your outlook for the overall market in the second half?
Well, we don't really focus on the second half or month to month much, but, we do view this generally as a constructive time to be an equity investor. If you've got that 5 to 10 year horizon, we think that, the economy's been quite resilient. Earnings have actually outperformed expectations from the beginning of the year. The labor markets remain strong. Inflation is been mitigated a bit. And so we think it's a constructive environment to be an investor.
All right. Well, thanks for coming on and talking about it.
Thank you.